Hello and welcome to our webinar today, which is on becoming a partner in 2026. We thought the timing might be quite good because a lot of law firms in particular have year ends at 31st of March coming up, and some have 31st of December, but either time of year people are looking at becoming new self-employed partners, whether they're fixed share partners or equity partners, and navigating what it means to be to become a self-employed partner in a partnership. So I'm joined today by the panel in front of you. We have Veronique Constantine, who is a partner in Westcott's, which is a firm with offices across Devon and Somerset. And Veronique is based in Plymouth. We've got John Atkins, who's a partner in Larkin Gowan, which is a firm with offices in Norfolk, Suffolk and Essex. And John is based in Norwich. And we have my colleague, James Curry, who is a tax director in Bozzacott, based in London with me, and we all work with professional practices and have a really keen interest in law firms. So we're collaborating on this and previous and future webinars. So we have a few topics to discuss today, and I'm going to chair things and sort of raise a few issues which then the panel will talk about. And the first is, so if you think about, you've been invited to join the partnership as either a fixed share partner or an equity partner, so a self-employed person, how do you decide whether to accept? And what should you ask if you are going to accept? So I'll hand over to Veronique first, if you can give us your thoughts on that.
Yeah, sure. So first of all, congratulations, because this may well have been a long-term goal for you, and you've concentrated and you've got there. So well done. But then it's just actually understanding what does it mean for you now. And just very briefly, there are different types of partner. You could be a salaried partner, which might be based on your current experience. So not much will change for you there. But today we're going to talk more about if whether you're a fixed share or a profit sharing partner. And essentially you become self-employed from that point, and there'll be an expectation for you to input some capital. So if you're putting capital into this firm and you're investing in a firm and essentially becoming a business owner, you're probably going to want to know what's the landscape of that firm, and what are you becoming a partner in, and how well you understand the firm's position and performance. So you can ask for a set of accounts from your in-house accountant, and then once you've got a set of accounts, what do they look like? Do you understand them? And whilst you're a professional working in your legal field, you're not an accountant, and you're not expected to understand them. So you've then got the opportunity to ask questions, and I think most partners within the firm that you're becoming a partner in will actually encourage you to ask those questions and reach out. So that's the first point of call, really, and understanding the responsibilities that you're taking on as a partner, which I know probably John's going to talk to us a bit more about. But they could be legal, financial. You're holding up the reputation of the firm. You're signing a partnership agreement, and you're essentially becoming a business owner. So that there is quite a bit to understand, and it's just asking those questions early on to be able to understand and know what you're letting yourself in for. Naturally, there'll be some questions around what your package will look like, which we'll come on to talk about in a bit. But essentially, as a self-employed partner, you're no longer getting a salary. You'll be having monthly drawings, and things that you might have had before, like a pension that your employer may well have contributed towards for you. You'll be expected to look after your own financial planning affairs. So that's another thing that you may well want to start considering, is pension planning, getting your own advisor in that kind of field. You may want to have a look at life insurance cover, which would have previously been covered by your employment, possibly. But how does that affect you now that you're a partner in a firm? So that could be personal life cover, critical illness, income protection. So these are all questions that you may want to understand to go forward with.
Thanks, Veronique. That's lovely. Yeah, so it is a quite a big change, isn't it? Particularly, as you say, with things like pension and life insurance. And I know James will speak a little bit on that a bit later on. John, let's hand over to you, because you had some interesting thoughts on sort of understanding the sort of DNA of what it means to be a partner in a partnership.
Yep, thank you, Claire. I think just building on what Veronique said, I think most of us, where you go into that partnership role, one of the biggest things that is underestimated is the mindset shift, where you go from being an employee to an employer. And then that has many different fronts, whether that be your risk, the risk of the partnership, your risk appetite as an individual, the decisions you make, and the accountability. So once you've obviously gone through the legal and process into becoming a partner, I think it's really important to have that support network when you have made that step to help you on that journey. Probably where you work in a professional service firm, I think your fellow partners might forget quite quickly what it's like to be a new partner, where they've been around the circuit quite a few times and it's kind of second nature to them. So I think the key thing to focus on is that support network. So whether you then have a mentor internally, somebody who is probably another fellow partner who's slightly ahead of you in the journey, and they can act as an advocate for you, share their experiences and knowledge, and help build up that understanding of the partnership, because probably you've spent quite a lot of time in your own business unit, whereas as a partner you need to be firm first, we rather than me, and focusing on the whole business rather than your own little or your own business unit. And then I think probably external as well is something that would be much welcome, maybe a coach to help provide you with an unbiased, safe environment for you to continue to grow and develop through like a questioning relationship.
Yeah, John, those are really valid points, because I think we're all conscious that we give a lot of support and training to employees in our business, particularly trainees. But when you become a self-employed partner, whether it's a fixed share partner or an equity partner, it just sort of happens, and there doesn't tend to be that sort of support there, and you find you do actually need it. Now let's hand over to my colleague James, who is the tax expert in this webinar. Now, James, I know there's an awful lot to talk about when it comes to tax, and you suddenly become a self-employed person. You're not going to be able to go into everything in as much detail as you'd like to. But can you take us through the basics of what it means to be a self-employed partner and what to expect?
Yeah, sure. So as a new partner, you've been through the steps of signing the partnership agreement, and then you've probably contributed capital to the partnership in some form, either through a bank loan or through personal cash that you have. And up until that point, you've been receiving a salary. The tax is paid through PAYE. You have your net pay, you go and spend it, and it's all quite straightforward. Once you become self-employed, the way you're paid is changed. You will receive drawings from the firm, and you need to establish and confirm who is responsible for paying tax. Does the firm reserve on your behalf and make a payment towards the tax, or are you paid gross and you need to reserve for yourself? So we found with clients and some contacts now that it really hits home when they receive their P45. That shows it's the end of my employment, and actually I'm self-employed, and I'm going to be responsible going forward. So there's a requirement to let HMRC know that you've become a self-employed partner. They're not notified automatically by Companies House when the partnership lets them know. So you might already be completing a tax return and have a tax reference, but you need to let them know, because for national insurance contributions purposes, which gives you your entitlement to a state pension. Now we'll talk about the timing and what's made up in the tax payments later on, but the key dates will be 31 January and 31 July of when you make 2 payments per year, and based on your profits. Now, as I mentioned, it's fundamental you understand who is responsible for those payments. You reserving, or is the firm? And having an idea of what is due is also very important, so there are no surprises, and that the reserve is being built up appropriately over time. And Veronique mentioned earlier about employer pensions, life and health insurance. So you become self-employed, you no longer qualify for those employer benefits. And a big one is with auto enrollment, you've made pension contributions through payroll and your employer has matched them. you're no longer receiving those employer contributions, so you need to make arrangements for yourself to make provision for retirement. But also there's very attractive tax relief depending on the level of your earnings. So that is something that's well worth receiving advice on, either from your accountant to let you know what tax relief is available, or having a financial advisor who can help both on the tax relief side of things and on the financial advice. And then, yeah, making sure you make appropriate provisions for the different insurance.
James, thanks. Yeah, that point on pensions, as James knows, I'm a bit obsessed with pensions because I find that a lot of my clients, and Veronique and John, I don't know whether you find the same with yours, are underfunded on their pensions. And actually, you get to a point quite quickly where you don't get any tax relief when you earn over a certain level. So looking at the pension situation as soon as you become a self-employed partner is really, really important. Now let's move on to other things. Let's assume that you decide to accept this promotion to a self-employed partner, whether it's a fixed share partner or an equity partner, and you're all set to become a partner on, let's say, the 1st of April 2026. How will you be remunerated, and how does all that sort of thing work? And I'm going to start with John, because John, you've been focusing a bit on sort of linking remuneration to what is sort of expected of you. Can you talk a little bit about those sorts of things that you might think about at that point?
Mm-hmm. No, thanks, Claire. Well, hopefully, prior to the 1st of April and joining the partnership in this example, you've been set clear objectives within your appraisal with either your managing partner or business unit lead. So I think the best way that I would look at it is saying, right, these are my objectives, and as a lot of professional practices, as we all do, we monitor our time and where we spend that. And I think it's correlating your objectives to where you expect to spend your time in the next 12 months. So if you've got business development and picking up new clients, then how many hours are you going to devote to helping achieve that objective going forward? And I think linking back to what we said earlier, I think the biggest mindset shift as well when you become a partner is probably you're going to spend more time on non-client matters than client matters, which is probably the converse of what you've been used to previously. So, and it's quite difficult for those non-client matters, for the objectives and the outputs, they're not really as tangible as recoveries, billing targets or so forth. What value you add to the partnership in non-client matters will be specific to your role. So I think, like you say, probably look at what your key roles and responsibilities are within the firm and your business unit, match it to where you expect to spend your time, and then probably revisit those goals regularly, because I think it is very daunting when you become a new partner. And maybe every 2 weeks, if you look at your objectives and think, right, this is what I look wanting to achieve in the first 12 months. Am I on target? Am I devoting enough time to that objective? And like I say, potentially using a mentor as well to help guide you as you start to build your partner journey.
Thanks. Yes, it does need a bit of structure, I think, doesn't it? Because it is a whole new world. James, let's go back to you for a second. Just, you talked a bit about the difference between, well, you talked about drawings and how that's what, the remuneration comes to partners via drawings. Can you just explain the distinction between profit share and drawings, and then perhaps talk a little bit in a bit more detail about the tax and when the first payment's due and that sort of thing, because it can come as a bit of a surprise, can't it?
Yeah, sure. So, yeah, there are different terms that are thrown around and often does lead to confusion, and new partners knowing what it is they're actually being subject to tax on. So the drawings is essentially what would be a fixed sum that you receive each month, and typically that should be agreed at the outset. And then you need to understand if there is a bonus, what are the terms for those bonus and the pay for achieving it, and then what the payment will be. Because when you're an employee, you're taxed on a cash basis, but as a partner and you're self-employed, your profit share is based off the accounts, which are prepared on the accruals basis. So it might be a delay between your bonus being paid and when it's being recognised in the accounts. For tax purposes, what you want to be focused on is what your taxable profit allocation is, and this is determined by the partnership tax return. So if you're a fixed share partner, do you share in the disallowables that are made for tax purposes, which can include items like depreciation and client entertaining? If you're an equity partner, it's almost certain that you would share in those disallowables, and often the taxable profit is higher than the cash that you've received. And this is a very common question we receive from clients of, they look at their profit in their tax return and saying, this is not the cash that I've received. And that's where it's important that you have a clear current account statement to show what your drawings, bonus and cash payments have been, and then reconciling that against the taxable profit so that you're clear on what you're subject to tax on. Now, we mentioned your tax payments are due on 31 January and 31 July. Now, if you join as a partner on 1st of April 26, that's the 26-27 tax year, you're not actually going to pay your first payment until 31 January 2028. So you have got the best part of 21 months, or 22 months to pay. Now, it's important that your reserve is being built up in that period, because you're going to be paying tax on the first 12 months as a partner, and then you have your first payment on account to make as well. So, and the payment on account is based on the prior year liability, and each payment is 50%. So you have 31 January 28 and then 31 July 28, and then you fall into the payment on account regime. And that 31 January payment can often be a shock for partners, or if they're prepared and they've done a cash flow analysis and looked at how these payments fall, it's not a surprise. The savings have been built up and they've got the money to pass over to HMRC. So that's being prepared for that situation is fundamental.
Yeah, so I think the overriding message with that is, when you get paid your drawings, don't spend it all, because you have to work out whether you've got to reserve the money to pay your tax and how much tax that will be, or even if the firm is reserving that for you, you need to make sure that the right amount has been reserved. Veronique, on that point actually about earnings being difficult to predict, can you talk a little bit about how that actually works in practice?
Sure. So obviously, if you're a profit sharing partner, you share in the profits, and it's great if those profits turn out to be bang on budget, but quite often they're not bang on budget. So sometimes being a self-employed partner, it's just getting your head around that there's less, it's harder to predict what the actual outcome is going to be in terms of what your final package is. So what we can just recommend there is just stay in touch with what the regular monthly management accounts are saying and what the anticipated profits are. And you'll obviously get a set of monthly management accounts from your in-house accountant, but then it's just being able to easily interpret and understand those accounts and make sure that the profit aligns to what you're expecting it to come out at. And that's quite easy as long as your accounting period is the 31st of March, which in a lot of cases now, with the change in tax basis, the accounting period is the 31st of March. So your accounting period does line with your tax period. And so you'll have your monthly drawings, but where some in-house accountants, well, is advisable to do is actually take a bit more of a prudent approach. So your monthly drawings aren't quite as much as what the anticipated profits are. So you then may well get periodic payouts of what your profit share is based on the actual outcome. So, as I explained, your internal accountant should be a great use of knowledge and advice there in terms of being able to advise you on what the outcome is. But as a partner in the firm, you're part of a partnership. You're needing to achieve the targets that you've set and had influence and input in setting those targets and budgets. You're responsible for performing, not just yourself, but the team around you, engaging and motivating the team, and making sure that the structure of your team is right to be able to achieve those goals, whether that's growth and financial growth. And there's an element of accountability, not just to yourself, but the fellow partners around you. And it's really a team effort in being able to achieve that final outcome of the profits that you've set a budget for and are wanting to achieve. So a little bit what John is saying there is actually the mindset shift in terms of you need a lot more thinking time to be able to actually be able to achieve those goals. And I think another thing to consider, just as a self-employed partner, is that you may well have made an initial capital contribution, but as the firm grows and it needs to sustain itself, it may well need more capital in the future. So that may be something that is called upon in the future, and that could be taken or in terms of reduced drawings or an additional cash injection or a bank loan. So I think it's just all these different factors that just to keep at the back of your mind when you're trying to anticipate what your final package will be and will look like.
Thanks, Veronique. Yes, it's good to mention that capital point because it does become something that year after year you tend to have to put in a bit more capital until it sort of stabilizes. So yes, you do have to finance that. So we've covered the main points. This is only a half hour or so webinar. So what we thought we'd do is end with some sort of final thoughts and top tips from each of our panelists. So James, let's start with you. Give us your top tips on what you'd say to somebody who's just about to be appointed a new self-employed partner.
Yeah, so I think fundamentally, who is responsible for reserving for tax, and then establishing that you're reserving sufficiently. The firm won't know your personal circumstances. So if you put in a large pension contribution, for example, they might over reserve. You may have other income that they don't know about and they won't be reserving. If you're reserving for yourself, get into a fixed habit of putting money aside each month and don't try and think you'll make a catch up on a rainy day. Fundamentally, the tax liability is your own. It's not the firm's. So HMRC will come after you. You would be the one subject to penalties and interest if the tax isn't paid in full and on time. So it's hopefully the tax can feel complicated, but knowing some basic fundamentals will really help you along the journey and should make this a simple, easier transition.
Yeah, thanks, James. You're right to put the frighteners on everybody with that point about the tax liability is the individuals, not the firm. So you're quite right. If it doesn't get paid, it's the individual that HMRC comes after. Veronique, let's pass across to you. What would be your top tip?
Sure. So, what we've explained so far, becoming a self-employed partner is quite different to anything that you've experienced before. So my best advice is just surrounding yourself and gaining as much knowledge as possible, whether that's your in-house accountant, whether it's the firm's accountant and tax advisor or your own tax advisor, and looking for financial advice and help, because how you set up and are responsible for your tax, your pension planning, your life cover, those are all things that you're taking in additional responsibility for, and don't be afraid to ask those questions. It's better to try and understand as much as you can from the very beginning.
Thanks, Veronique. And John, final point to you. What would be your top tip?
I think it's probably just getting the team on side. I think you've probably been promoted from a pool of people who now report into you. So obviously that will create some questions for them. It will be, well, will your promotion create change? How will your relationship with them be? So I think with regards to getting them on side, obviously you were aligned to that group. You've now aligned to a different partnership group and you've got huge partnership cabinet responsibility. So I think it's try not to isolate yourself from your previous peers, acknowledging and appreciating the team support and saying thank you as much as possible. It's a very quick thing to do and it does go a huge long way. And probably try not to change too much immediately if you do have quite a large level of roles and responsibilities, because we all know that change management is very difficult. I think then from a personal perspective, and something that I've definitely found when I was obviously still am on my partnership journey, is then you cannot compare yourself in year one as a partner to a fully established partner, because they have got so much more experience than you. You can't live up to their expectations and you're on a completely different part of the journey to them. And I think probably just the first year, if you were a partner, and if you define success, it would probably be not dropping the ball, keeping the team on side, and maybe growing your client base a little bit along the way. And that is actually, as it might sound not that glamorous, but it's probably actually a really successful first year in grounding yourself for the next part of your career.
Yeah, that's a great point to end on, John. And I think also, you know, congratulate yourself for having made it to the pinnacle of what we all aim for when we join a partnership. When we think back to when we were trainees, you sort of think, well, I want to try and get to partner. And then when you do, you need to, you know, stop and congratulate yourself for a second. So I think we've covered most of the key topics on this, and we are all available if anybody wants to discuss anything with us in more detail. We are going to have another webinar in, I think, April. We haven't pinned down a date exactly yet, but it's going to be, we think we're going to talk about internal management accounts and how to make them more useful. And this will be particularly important for new partners, I think, because you will suddenly become aware of more internal financial information that comes your way. And it might be useful to join us for our webinar on that, because we'll be able to explain how you can decipher the information that comes across to you and what sorts of questions you should be asking your finance team. So thank you very much to our panelists, Veronique, John and James, and thank you to the audience, and we'll hope you join us with the next one. Thank you.